It's Wednesday, the 17th of February 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines: BHP, the big Australian, pays a record dividend as surging iron ore prices and sales underpin a bumper profit. Plus, confidence in the global economic recovery pushes equity markets higher in Asia, Europe and North America. National Australia Bank warns there's some way to go before the economic recovery is guaranteed. And the AstraZeneca vaccine gets the go-ahead in Australia. BHP's reported a $7.8 billion underlying profit for the 6 months to the end of December and will pay out $6.5 billion in dividends, a record amount, as the big Australian benefits from higher iron ore prices and production. It was the best 6-month underlying profit in 9 years, and the big dividend, in part, makes up for the disappointing payout 12 months ago. Chief Executive Mike Henry said there were two trends that would keep the good times rolling. The first was government and central bank stimulus. The second was an even longer-term trend. As the world becomes greener, demand for commodities like copper and nickel will soar. They're both commodities that BHP mines, and even iron ore and coal will benefit in the short to medium term as economies demand steel to construct renewable power facilities like wind turbines. While the iron ore business is booming, BHP's coal operations along the East Coast lost more than $600 million in the 6 months, mostly a reflection on China's ban on coal imports from Australia. BHP's share price ended the day up 2.6%. What can I say? Big Australian, big exports, big result. Overseas news first up. On Wall Street, the S&P 500, Nasdaq Composite and Dow Jones Industrial Average all hit new records overnight, before easing off their highs. China's exploring whether it can hurt US defence contractors by limiting the export of rare earth minerals that are crucial for the manufacture of F-35 fighter jets and other weaponry, according to reports in the Financial Times. There's been an extreme cold snap in the United States, with snow covering Texas, triggering a surge in demand for power and, eventually, rotating blackouts for 3 million customers, including big oil companies. And Israel is the poster child for the vaccine rollout. And in the 6 weeks since administering the second dose of the Pfizer-BioNTech vaccine, about 80% of those at high risk have been inoculated. The country's experienced 94% fewer symptomatic illnesses and 92% fewer critically ill cases. On to local news. National Australia Bank reported a flat December quarter profit. Chief Executive Ross McEwen said economic conditions were encouraging and the bank was pleased with the drop in the number of frozen loans. But he warned a full recovery was far from certain. Ongoing health alerts, lockdowns and restrictions, and the winding back of JobKeeper could still hurt the economy. The AstraZeneca COVID-19 vaccine has been approved for use in Australia by the Therapeutic Goods Administration, meaning the country now has access to 2 vaccines. The drug's been approved for adults over 18 and will be administered in 2 doses, 4 to 12 weeks apart. The federal government has placed an order of 54 million doses of the drug, 50 million of which will be manufactured domestically by CSL. The Reserve Bank is slightly worried about debt-based investments like housing, though not enough to lift interest rates. The central bank's board minutes were released yesterday, and they argued that the benefit to the economy of low interest rates easily outweighs the risks from higher house prices. In federal politics, the government has dumped the most controversial part of its industrial relations omnibus bill to ensure the legislation doesn't end up stranded. The coalition dumped the Better Off Overall test, otherwise known as BOOT, in the bill after the crossbenchers joined Labor to defeat the government. The government wanted to suspend BOOT for 2 years to allow pandemic-affected businesses to not comply with the test. Online property group Domain said first half revenue fell and the group won't pay an interim dividend. Its boss, Jason Pellegrino, said the property market had experienced a modest early recovery but still had a way to go. He emphasised the need to reform stamp duty, as the New South Wales government suggested. Net profit rose slightly. Figures from ANZ show that spending in Melbourne slumped 76% in the first 2 days of lockdowns. There were 2 new community-transmitted cases of coronavirus in Victoria yesterday. Data from research house Chant West shows that superannuation funds have performed well in the first 6 weeks of the year, with the medium growth fund up close to 3%. The median fund is now worth 18%, more than its market low back in March. it's really worth checking your own fund and finding out how it's performed against the median. I talked about Zipco's surging share price yesterday and commented it was very unusual for a stock to run so hard when there's been no news. Yesterday, the ASX asked Zip why its price had run. It was up another 9% and has more than doubled over the past month. Zip said it didn't know why. That's the Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with Tim Harcourt, the airport economist, about Australia's relationship with China. I'm Sean Aylmer. Enjoy your day.